everyone. My name is Peter and I welcome you to PwC Tax Bite podcast series. In this podcast, we're going to talk about DAC9. After DAC6, 7, 8, we have now a new DAC9 proposal. And who else could I better invite to talk about this development than Jean-Philippe Gawest, the senior counsel in our team, frequent speaker here on the podcast, and part of his time also working with university, and Maxime Allard, who you may have heard in the previous podcast, where we talked about the Belgian QDMTT return. I think this topic is a natural continuation of that. So, Maxime, welcome back in the podcast, and looking forward to have your thoughts from a Pillar 2 and compliance perspective in this respect. But maybe first of all of a sudden, there is now a proposal for a DAC9, or all of a sudden. Maybe, Jean-Philippe, this didn't come as a surprise for you, maybe.
Indeed, Peter, and thanks again for inviting me, and hello to everyone. Indeed, so this as such come not as a surprise already in the first half of 2024 during the Belgian EU presidency still. The European Commission already announced that they're working on a DAC9 which seeks to facilitate the compliance aspects of Pillar 2. And to give some background, if you look at the OECD Pillar 2 model rules and as well the EU Pillar 2 Directive, they has a section on filing obligations. In the Pillar 2 model rules, they talk about the globe information return, and in the directive, it's the top-up tax information return. But actually, it is twice the same document kind of, and it is with respect to Pillar 2 for the implementation, a lot of data needs to be filed, and the idea is to have to collect this data in one information return. And the idea with is of DAC9 is as facilitate the filing obligation of this top-up tax information return in the EU. And how is this done? Well, this is done via then the proposed DAC9, so the 8th amendment to the Directive on Administrative Cooperation, which regulates, let's say, the information exchange of information within the European Union. In the European Union.
Okay, thanks, Jean-Philippe. So DAC9 will organize that exchange of information. So Maxime, in the previous podcast, you commented on the Belgian proposed QDMTT return and all the details in there. So will Belgium now have to revise completely the QDMTT return they just published?
Thanks, Peter, and thanks again for inviting me as well. So no, to answer your question, no, that's not the case, Peter, because the proposal for directive is actually mainly focused on the global information return. But there is actually local compliance as well for countries having implemented a qualified minimum top-up tax, which allows as well to collect the Pillar 2 top-up tax directly at source, so basically locally. If DAC9 will give insight on how the exchange of information between the member states should be organized and how to avoid as well redundancy of information, it does not prevent actually local tax authorities from requesting information in their local QDMTT return, as is the case in the draft QDMTT return in Belgium.
Okay. So that is very interesting. So basically, these are two separate returns, and the DAC9 is focusing really on the globe information return, the top-up tax return, as it's called in the directive. Okay, interesting. So, Jean-Philippe, maybe back to you. Can you explain a bit better how it will operate in practice?
Yes, of course, Peter. As I said, so you have this section in both directive and the globe and in the OECD model rules with filing obligations. And actually, if you look into these rules, the general rule is that every constituent entity has a filing obligation where it needs to file this an information return. There is a derogation from this general rule, and that is if the ultimate parent entity or a designated entity files an information return for the whole group. And in addition, there must be an exchange mechanism between the member states or the states, between the states, so that they receive the required info. Well, now what they want to do with this DAC9 is facilitate this exchange of this information return between the EU member states, so that you will have to add a designated entity or the ultimate parent entity will only have to file one information return at a top-up tax information return in one member state, and that then this information or part of the information will be exchanged between all other EU member states. To facilitate this, so on the one hand, there's a mechanism that are, let's say, obligations for member states that they have to put in place. On the other hand, the information that needs information return that needs to be filed by businesses. For that, the directive, the proposed DAC9 directive, contains in Annex 1 a template return, which then needs to be filed by the ultimate parent entity or the designated entity. And this template return is based on the Globe Information Return designed by the OECD. So this is done on purpose to align it as much as possible. And the general idea behind it is then that this, and this is well how the Commission brings it, is if you read the press release, so they say this is really to help businesses to facilitate compliance with Pillar 2 obligations, because instead of filing an information return that every constituent entity has to file an information return, only one group entity, the ultimate parent entity or the designated entity, has to file an information return, and this will then be exchanged. So interestingly, if you read the proposal of the Commission, is that they really sell this as simplification, and it fits in the broader policy of reducing the compliance burden with 25% following from all reporting obligations. Of course, the question is whether business will see this as really as a simplification or something, because first of all, the Commission itself introduced via a directive the Pillar 2 obligations, and maybe then saying, well, now with this is a reduction of the compliance burden. Well, maybe that would be a bit too much to say. But yeah, but indeed, as such, I think it's a good idea to regulate this at EU level.
Okay, yeah, thanks for Flip. So got it. So the idea should be, if you're a headquartered European group, you only file your global information return in one country, and then exchange of information would take place with the other country. Okay, very clear. You said this is a draft, a proposal DAC9 directive. Well, how do the next steps then look like in practice?
Indeed, that's very important. It's a draft proposal, so it's not law yet. It's not in force yet. So as with every proposal in the area of direct taxation, now unanimity needs to be found between the EU member states. So that's then the EU Council, where you need unanimity, and then when it's agreed upon, so it's adopted, it still needs to be published in the EU official journal before it then would enter into force. If you look at the provisions, the draft provisions, well, then it's stated that that if it would be adopted, member states will have until the 31st of December 2025 to implement DAC9 into domestic law. So let's say that's really quick. So it will already be by the end of next year that member states will have to implement it into domestic law. And as you know, now currently there is the Hungarian presidency, so I assume they will still try to reach this unanimity under the Hungarian presidency. But as you know, the Hungarian presidency will end by the end of 2024, and of 1st of January 2025, Poland will take over the EU presidency. So there, it's now it's important to closely monitor whether this unanimity will be reached.
Okay, yeah, interesting. And yeah, you mentioned this is quick. I of course understand what you want to say, Jean-Philippe, that they only have 1 year, the member states, to implement it. But looking at the perspective of the companies, of course, who need to do their compliance, they probably are in scope of Pillar 2 already this year, 2024, and they probably will only know by the end of 25 how the actual compliance will look like. So that brings on some questions. But maybe, Maxime, this is of course your area. You work day to day with companies who want to organize themselves in view of Pillar 2 and setting up their compliance. What's your take from this? How important is this DAC9, you think?
Thanks, Peter. I think that's an important step, right? Because if we look at Pillar 2 as a whole, it really increases the administrative and compliance burden for groups in scope of Pillar 2. Let's be clear and think about the multiple QDMTT returns to be filed locally when it is applicable, of course. Think about as well the globe information return to be filed generally at the level of the ultimate parent entity, but including a lot of information, of course. Think about as well the notifications that the local tax authorities are requesting the taxpayers to file to collect additional information. So clearly in that context, DAC9, which aims to cut down the administrative burden, as you mentioned, Jean-Philippe, is welcome in a context where Pillar 2 increases the overall compliance burden. But let's be clear, even with that reduction, Pillar 2 on a global scale, I would say, will still largely increase the overall tax compliance burden for groups. So while the proposal for directive is definitely a step in the right direction, it will need to be seen in practice how this will play out locally, especially when it comes to the QDMTT returns, but not only the QDMTT returns, but also with the local Pillar 2 notifications, which we see more and more countries are implementing. And if we look at Belgium more specifically, the actual impact of DAC9 is even less clear, as Belgium is really leading the way for Pillar 2. The tax authorities have already imposed, as we all know, the filing of a Pillar 2 ratification, which was mainly due by 16th of September, and also published very recently the draft QDMTT return, which is expected to be filed by 13 November 2025, so for calendar financial year, of course, which is 7 months before the Globe Information Return is filed. And potentially it means as well up to 13 months before the first exchange of information will happen for the first year, whereas Belgium already plans to issue assessment notices as early as December 2025. So the tax authorities will clearly need to have sufficient information in advance, which is the reason why they do collect so much information on the group structure, the consolidated financial statements, the elections as well that are opted for by the Belgian entities, etc. And this via the notification as well as the QDMTT return in Belgium. So I would say that in practice, we'll need to see how the local tax compliance will interact with the new directive proposal. As already mentioned, DAC9 does not limit the ability from local tax authorities to collect information in view of the collection of the qualified minimum top-up tax. And this is the case among others in Belgium, where a lot of information it was needed or is needed and will need to be provided as well way before the Globe Information Return is actually filed. So if there is little doubt on the fact that this development is interesting from a compliance point of view, it also raises important questions about what information needs to be provided, when it should be provided, and where it should be provided as well. And an important next step in this context will clearly be, in Belgium at least, the publication of the final QDMTT return.
Thank you, Maxime, for sharing your views, and also Jean-Philippe, of course, for explaining about DAC9. This brings us to the end of the podcast. I have taken a few things away from this discussion. One is DAC9, although it is an important simplification in the compliance, it doesn't mean, unfortunately, that taxpayers will not be confronted with multiple tax returns in various member states or countries around the world. Pillar 2, that's an important takeaway. That brings for me also an important attention point. As a taxpayer, you will need to make sure that the information that is shared in, for instance, the QDMTT return in Belgium is consistent with the information that later on is filed 13 months later, let's say at headquarter level and exchanged with the Belgian authorities. Any discrepancies between the data are likely to result in extensive discussions, questions, etc. So here, the data quality and the preparation will be key. And I think a last takeaway is that I think we see a continued avalanche of developments around Pillar 2. So I would say to the audience, if you want to stay in the front row on these developments, I would say continue to tune in the podcast series and register for it. With that, I thank you for attending, and thank you, Maxime and Jean-Philippe, for your comments.